Good day, ladies and gentlemen. Welcome back to another edition of the market review. On the rate for the strategy and all of that. I think there's three things I want to touch on today. First, we'll go through the calendar just now, and then I want us to take a look at how the rate for the event strategy played out this past week, and then we'll hop onto the charts for the daily and weekly charts to see what it's presenting there, to see if there's any opportunity that we can target with this busy week of trading waiting for us. All right, first of all, let's look at the calendar. The calendar is pretty full, so obviously there's nothing to do on Monday. But Tuesday, Wednesday, Thursday, Friday is full with red for the news, non-farm payroll. And we also, this week, I think the following week is the US election, so be super careful, ladies and gentlemen. As much as these red folder strategies is designed for very specific things, there's a lot that's happening this week, and the elections, that's not something we know in advance. I know a lot of people have obviously opinions. It all depends on how it plays out, and if anything big happens during the election period and all of that. So all I'm saying is we come to the end of the year. It's a time where you should not be trading. Basically November, December, that's when you start switching off mid-November, and then you should down tools for the remain of December and come back mid-January. And that's just a quiet time. It's unpredictable times, but also we've got elections await us. All right, so there's lots to do today. So this upcoming week, and I will definitely keep an eye on the charts every day just to see how it plays out, and if there's anything that sets up. Sometimes on days like this or weeks like this where it looks like it's going to be very unpredictable, and those sometimes sets up the most perfect trade setups. All I'm saying is just be careful, and just keep that in mind. Keep your risks tight, and and don't blow your accounts. All right, let's look at what happened in this past week. So on Thursday, this nice candle up here, that was the news event, and we've got that big spike up, taking these highs out, and it spiked down, but did not take any lows here. So first things first, we as traders obviously mark it out, and we also mark out the low. So what I want to show you guys, instead of this low over here, I've marked out this low, and the reason I've marked out that low, and I'll show you now, is because these candles created this perfect equal lows. So we can call this red folder. We call it red, just so red folder targets, and we'll make this, we'll make it 20, and we'll make it red. We'll make this red, and that's it, and we'll make that black. All right, so red folder target here, and we've got red folder targets up here, which is also and we'll make that a 20 as well, just so it stands out, and we'll put that on top. All right, so these are the two targets. We're targeting this high and we're targeting this low, but we moved it to that low because of that equal low scenario that it printed for us there. All right, so one of my important rules around the strategy, guys, is when price is in the middle here, you do not touch a trade. And I can tell you now, some people look at this little spike out to that low and try to buy in here to target that side. And just before we get there, it reversed completely. And if you were in it, you would have get stopped out. We want candles to close above there, give us a proper setup to reverse, like that high or this low run with some sort of liquidity. Well, like this, a fair value gap that runs it, and immediately inverse to go to the other side. All right, so you might ask, okay, so why this one? This is the exact one I took and I got stopped out. So I did not participate anywhere in here. There was a lot of people that took the short here and say it was a perfect trade and all of that. That's fine. I mean, if that's what you trade, that's what you trade. Our strategy is the high of this candle, the low of this candle. I had equal lows here. We took liquidity. We bounced through it aggressively and invert a fair value gap over here. And we can actually mark it out so everybody can see it. And that's what I thought was the, that's where we are. And obviously did not work out that way, but I'll show you just now. So you inverted here, it came, I put my entry there, and at the middle took me out, stopped me out straight away. I was like, okay, it's fine. I took a loss, and then the market dropped. I then go and mark out this low here, and all I need now is, and let's just do it so we can all see it. Let's just take this out, call it that. These are all liquidity, and I saw this big candle here and I thought, all right, this is a nice fair value gap that I could give it a go again. But for me to take this, I need to see price close aggressively, inverse this, but it did not. It literally came up. At this point I thought we're getting there, and then it just slams down. So I did not take that one. I then sat out, and we marked out a new low, and the new low was over here. It came down, it worked in this fair value gap up here and runs it, but there was no fair value gap for me to get inverted to take it to the other side, and I've left it. I then looked out for this new lows, so we got higher lows, lower highs, and I thought, okay, so we might run these liquidities. Maybe that is a liquidity and we don't need to go there, but we might run this and see if it presents any, fair value gaps. And sure enough, we got this 3 candles, big down, and I then went, and I have to mark this out so you guys can see it. I then looked at it, and this was aggressive enough for me to take a long. I entered there as a touch. I never got my 50%, so I was in. The minute I broke this high over here, I moved my stop to break even, got stopped out at break even. So I was -1 there, and there I was at break even. At this time I was pretty frustrated, and I started seeing this big consolidation. Whenever you see a big consolidation here, you don't plan to trade within it. When you see a consolidation, you expect some sort of manipulation, and in this case, consolidate, and then manipulate, and then reverse. But I did not trust this this fair value gap over here. As much as it went down, this candle stopped almost at 50%, just over 50%, and then it took 2, 3, 4 candles, to get to the other side. And I thought, okay, well, let's have a look and see if it goes into this fair value gap and reject it. Then I could look for it, for something. But we broke right through, and luckily I didn't take anything there. And this is where the next low was. At this point I thought, you know what, we passed the 11:30 mark. I'm going to wait till after lunch. I'll wait till 1 o'clock or 1:30 and see if there's any opportunity to go long. But in the meantime, we broke down lower again, and we created this inverted fair value gap right yeah. All right, so it was a fair value gap, aggressively took out that low, spiked through it again, hold price, and then aggressively snaps right through it. That is an entry. That was a good entry, and that was the entry to take you all the way to the top. And I need to shrink this, because the other thing that was insane about this trade, it took a whole day into the next day in London to target the red folder target. But then again, we consolidate, we ran liquidity, we ran it a little bit more, and then moved right back into consolidation and get stuck there. But come on. But even if you've taken that trade, you kept your stop quite tight, and the minute you move over this swing point here, you would have moved to break even, so you would have been on a break even trade. But then you had to sit through all of this, and at some point you would have decided, you know what, should we close this trade? What in the world is going on here? But then it is something where you enter down here to say, listen, am I prepared to hold it overnight? Because this thing could drop overnight and stop you out. If you were at break even, it's good, but that doesn't mean you can't lose money. You could close the market, and when the market opens, it could gap beyond there, and then you would have been in trouble. But be as it may, it played out. It took a very long time to play out, not what we normally see. And I don't know if it's something to do with the way the market is behaving towards the end of the year, with the elections around the corner. I have no idea. All I know is we dropped below the first half of the first low, and it took its time, but eventually went all the way up to the top side of that target. So it basically ran both sides, and then it just continued running higher. All right, so with that out of the way, let's go to the daily quickly. So yeah, so all in all, that wasn't a perfect trade. It wasn't something that I was pretty amazed about or happy about to say, guys, it was such a great trading day, because it wasn't, in my opinion, and it was very frustrating for me. But that's how trading works these days, and it's something you got to learn to adapt to and not get too frustrated, but keep your risks tight and let the profits run to sensible places. And the strategy obviously shows you there's a sensible place to go to. And this week, or this past week, was just a demonstration to show you guys no strategy is 100%, and no move will work instantly. Sometimes you'll get your profits in 1-2 minutes, and days like this past week, you can wait for half a day or whatever the case is, but it can take a while as well. That's probably the longest one I've waited for to. Out of all the ones that I've traded, I've came across 2 of them that did something similar, that only played out in London the next day. All right, so here's the daily chart. So, we've spoken about the 50, the quadrants in here where this 50% wasn't run, and then we saw it run, and then we see the rejection, and then it ran up again, then a rejection, and now it ran higher to fill this whole gap, taking more liquidity. If we close above this orange block, this fair value gap, then I would target these highs. But as long as we stay within it or close below it, I'm still targeting these lows, these lows. These are still liquidities, and we're getting closer to a time that can create that volatility, which is your elections. And I would not be surprised to see some sort of big manipulation this coming week to run high for people to think we're going long, and then snap back down for people to think we go short, and then consolidate. And that's just creating, building up a position for elections to go either higher or run these lows. And again, remember, we've got these equal lows down here. So that is what I've got here. I don't have anything specific. At this point in time where I'm sitting here, my view is still bearish because of all the sell side liquidity that's still untapped down here. All the buy side here gets taken, gets run, and we need to see what happens this week. Let's just jump to a weekly quickly and see what that actually shows us. Right, on the weekly, and I think it's a similar thing here. There's nothing that stands out where I can say, guys, this is what it is. This is what I'm thinking. Yeah, I was expecting this favor, this wicks 50%. We went through it. We spiked higher. We came back down. Last week we ran up, we ran down, and we basically where we opened. So it's almost like a lot of people will say indecision. I don't think it's indecision because the market is very manipulated and algorithmic. So this could be time distortion to keep price in a in a range type of thing before the big move happens to potentially go for this lows, this low, yeah, those equal lows. I'm not saying that's where we're going. I'm saying this is just holding price in a tight range to either manipulate to go, or I don't know, like this candle here took those lows and took those highs and stopped right in the middle. That's just trapping people on both sides of the market. As simple as that. So that is basically what I've got. Unfortunately, I don't have any clear targets except these lows, but there's nothing here. I need some displacement showing me we want to go somewhere, and there's nothing right now. So with all of that said, ladies and gentlemen, that's all I've got for you guys this week. What we'll do, I'll probably put some short videos out this upcoming week as we see Redfall, the news unfolds, and entries and so forth. Might be a very difficult week. We might sit here next week and say it was a super awesome week and everything just played out by the book. But just be careful. Don't overtrade. Don't kill yourself. Worrying about where price is going. If price doesn't show you directly, this is where I want to go, then rather sit on your hands and wait for a very clear opportunity. There will be ample opportunities this week. If you miss one or two, there will be another one. And remember what I always say, guys, you only need one good trade. I mean, we've seen these trades. If you keep your stops tight, you can easily get a 10-to-1 trade. And if you risk 1% or 0.5%, it's easy to make 5% or a 10% on your return. And that is a super return. So you don't need to double your account in 1 week. I mean, that's not the right expectation anyways. If you're going with that mindset, you will blow all your accounts. You will never make money. Your expectation is wrong. Let's focus on the process, the strategy, and what the market tells us, and let's try to trade as best as we can with them, so we can take our money out and sit on the side and not lose any money. Hope you guys find any value through these videos, and especially this week, this one. If you like it, give me some thumbs up, like and share it, and post some comments in the comments below if you need more clarity, if you've got questions, even what you see in the market. Let us know, and let's talk about this. And so don't overtrade. Have a great Sunday, and I will speak to you guys in the week. Bye bye.